Last week, there were two companies from digital infrastructure domain that have posted extraordinary Q4 results. And both of them are already buzzing a lot over social media. First company is HFCL. In Q4 results that got declared on 30th April, its sales are up 128%. Profit reported 184 crore versus loss of 83 crore in same quarter last year. And quarter-on-quarter profit is up almost 80%. Second company is Sterlite Technology. Its sales are up 37% and profit reported 59 crore versus loss of 40 crore same quarter last year. And their stock price is already in action. HFCL stock has already doubled within 3 months. Sterlite Technology has jumped 250% within 3 months from January lows. The big question here is, what is driving such crazy growth for HFCL and Sterlite Technology share price? Now interestingly, both companies have a track record of being extremely cyclical. HFCL has literally delivered no revenue growth in last 7 years. Profits are stagnant in last 5 years. In fact, during 2024, its profit tanked badly. Sterlite on the other side has also similar story. Literally no revenue growth in last 7 years. Margins are extremely volatile from peak of 23% to 10% and profit tanked from 578 crore and actually went for losses for 2 years. And that got reflected in both companies' share price. HFCL share price has witnessed 75 to 90% correction in the past, and its stock tanked from 2008 peak, creating massive loss for investors for many years. Recently also its stock price jumped and then tanked badly before recovering recently. Sterlite also has a weak wealth creation history where stock did jump in the past, but it eventually tanked badly every time. So the question is, why has HFCL and Sterlite business have been so volatile in the past? What has been driving the recent rally? And most important, how sustainable is the wealth creation opportunity from current levels? To answer these questions, we'll deep dive into the business model of both companies, try to understand the growth drivers for recent rally, and analyze the growth opportunity and most important, key risks that will help you decide if HFCL and Sterlite Technology can continue to outperform in near future or not. Alright, let's get started. Okay, before we move ahead, let me address something very important. In recent past, I have been receiving multiple messages and email about fake profiles created in my name, especially on Instagram and Telegram. Every time I report them, new profile keeps coming up. But recently, I received an email where a person was actually harassed over a phone call. And that is very serious. Now, I honestly don't know how these scammers are getting people's number. But clearly, this is not just about fake profiles anymore. This is an even serious problem. So let me make one thing very, very clear. I never give buy or sell calls and I never give trading tips. My only goal is to educate and help you understand businesses and investing. I have only one official website with my name sahilbhadviya.in, one YouTube channel that you are currently watching, which is again verified, and on Twitter I have a verified account. On Instagram I do have an account but I'm not very active there. And on Telegram I only have a private group for my exclusive community member. Apart from this, I do not operate anywhere else. Also, I'll never send you a random message or a friend request. So if you receive anything like that, it is 100% fake. The only time you may receive a message from my team is when you enroll in my series through my website. And even then, it will come from my official number, which you can cross-check on my website itself. So please be very careful. Do not join any such fake group or profile. And if you come across anything like this, kindly report it. Okay, moving on, let's first understand HFCL business. So traditionally, HFCL has been into manufacturing optical fiber cables, telecom equipment, and executing network projects. So whenever telecom companies expand their network, whether it is 4G rollout, BharatNet, or fiberization, HFCL participate in that through product supply and project execution. Now the problem with this model is it is highly dependent on telecom capex cycle. When telecom companies are spending aggressively, HFCL sees strong order inflow. But when that capex slows down, growth simply disappears. And that's exactly what has happened over the last few years. After the initial 4G rollout, telecom operators slowed down their spending. At the same time, the telecom sector itself went through consolidation and financial stress. So naturally, order inflow for companies like HFCL become inconsistent. HFCL business also had a large project execution component, which is the EPC work that involve manual labor, digging, and ground level installation. These projects are usually delayed, they face working capital pressure, and have razor thin margin. You spend the money today, but client might not pay you for next 12 months. This meant HFCL was often rich on paper, but cash poor in reality. Plus, segments like optical fiber cable are highly commoditized, where pricing pressure is always there. So margins keep fluctuating depending on demand supply and raw material prices. Now let's look at Sterlite Technologies. Sterlite operates in a similar ecosystem but with a slightly broader play. It is into optical fiber and cables, network solution, and global telecom projects. In fact, Sterlite has historically tried to position itself as an end-to-end digital network solution provider, not just a cable manufacturer. But despite that positioning, the core dependency remains on global telecom capex. Now the challenge with Sterlite technology has been even more bigger. Because it has significant exposure to international market, its business depends not just on India, but also on global telecom spending. And globally, telecom capex has been quite uneven over the last few years. Second, Sterlite also had a large service and project execution business, that is EPC, which tends to have lower margin, higher execution risk, and revenue volatility. That's why you have seen margins fluctuate sharply from more than 20% level to low double digit. And when margins contract in a business like this, profit can fall very sharply, which is exactly what happened and company moved into losses. So if you look at both companies together, the common pattern is very clear. Both operate in a space that is cyclical, capex driven, and highly competitive, which is why growth has never been consistent and profitability has been volatile. Now this brings us to the most important part. What has changed now? Why are both companies suddenly showing such strong growth at the same time? Let's discuss it. Let's start with HFCL first. So there are two key triggers for HFCL. First is massive demand for optical fiber due to data center boom. I'm sure you would be aware of data center growth in India. Since India offers cheaper land, resources and labor, plus government has provided 20 years of tax holiday for hyperscalers till 2047. So every hyperscaler has committed billions of dollars of investment in data centers in India. Now obviously you need optical fiber in data centers. And just to give you an idea, an AI rack requires 36 times more fiber cable as compared to a standard CPU rack. Now what is happening is, due to massive demand, the supply has been constrained. As a result, the optical fiber cable prices have gone up by 30%. So companies like HFCL are witnessing not only high demand, but also getting a premium price that would expand their margin. Another positive factor is the world is running out of preform, which is a specialized glass rod used to make fiber. It takes 2 to 3 years to build a preform plant. And HFCL has committed 580 crore of backward integration to manufacture the preform. Apart from optical fiber demand, HFCL has also forayed into aerospace and defense manufacturing through its new subsidiary HFCL Advanced System Private Limited. Their products include electronic fuse that are used with artillery munition, telescopic sight, high capacity radio delay and so on. They have an order book of 2,230 crore, out of which 1930 crore order book is via proposed acquisition of various aerospace and defense business. So please note that currently 90% of defense order book is coming from acquisition of new entities under their subsidiary HFCL Advanced System Private Limited. Also recently, Andhra government has allotted 1,000 acre land to HFCL for defense manufacturing facility. But the major growth is still coming from optical fiber cable, where HFCL has made a deal of $1.1 billion, that is 10,159 crore order book from global multinational. Overall, company's order book has grown 3 times from 7,100 crore in FY23 to now at 21,200 crore. Now if you look at Sterlite, the growth story is slightly different. Today, the entire world is going through a massive shift towards data center and AI. With AI, computing architecture is changing completely. We are moving towards high-speed GPU-based system where data transfer speeds are going as high as 1.6 terabits. At that level, traditional copper simply does not work efficiently. And that's where fiber becomes essential. Sterlite is not just playing the basic cable game. For example, they are working on Neuralis, which is a connectivity solution specially designed for AI-ready data center. Then it offers hollow core fiber, which can reduce latency by 35 to 40%. And it offers multi-core fiber that can increase capacity 4 to 7 times within the same infrastructure. So instead of competing on price, they're trying to compete on technology and performance. Another advantage for Sterlite is its glass to gigabyte integration. Optical fiber is made from a very specialized form of glass called preform. Most companies either buy this raw material or operate only in one part of the chain. Sterlite is involved from this stage itself. So Sterlite controls the entire value chain, from raw material, which is glass, to fiber manufacturing to network deployment. This gives them better control on cost, quality, and innovation. Now, apart from data centers, there are two more structural drivers. First is FTTX, that is fiber to the home. Globally, governments are pushing for high-speed broadband infrastructure. In the US, you have programs like BEAD. In India, you have BharatNet. And across market, fiber penetration is still low. So there's a long runway for growth there. Second is 5G scaling. As 5G networks expand, they require massive fiber. Overall, Sterlite order inflows has more than doubled in FY26 versus last year to 7,687 crore. In short, both HFCL and Sterlite are benefiting from a massive surge in optical fiber demand, which is driven by data center, AI infra, 5G rollout, and broadband expansion. But how they are positioned within this opportunity is what makes the difference. In HFCL case, the growth is largely coming from strong demand, pricing tailwind in optical fiber, supply constraint leading to margin expansion, and large order inflow improving revenue visibility. On top of that, defense is emerging as a strong optionality, although still at an early stage and largely driven through acquisition. In Sterlite case, the play is slightly more global and technology driven. They are directly positioning themselves for AI and data center ecosystem, focusing on high performance product rather than commoditized cable, leveraging full integration to improve cost and innovation, and along with that, structural drivers like FTTX and 5G are adding to long-term demand visibility. So the common thread for both the companies is very clear. Demand is exploding, order books are expanding, and that is reflecting in revenue. Plus, margins are improving. Both companies have seen sharp increase in operating profit in recent quarter, and that's exactly why you are seeing such sharp growth in earning. Now, so far we have seen the positive side of the story. Everything looks hunky-dory. But let's not forget that both companies have a track record of extreme volatility in share price, where stock prices have tanked 70 to 90% in the past. So let's discuss the key risk. Alright, the first risk is this is a cyclical rally and not structural rally. Let's be very clear. This rally in HFCL and Sterlite is broadly driven by a massive capex cycle in data center. Today, telecom companies, data center players, and government are spending aggressively. But that kind of capex won't last forever. And when capex slows down, order book growth falls, and when that happens, revenues don't just slow, they can actually stagnate for many years. That's exactly what we have seen in the past. Second risk is optical fiber is still a commoditized business. Even though demand is strong today, optical fiber is not a highly differentiated product. Right now, prices have gone up because of supply constraint. But if new capacity comes up, then prices can correct and margins can shrink. So the current margin expansion may not be permanent. Then third risk is execution risk in new segment. Both companies are trying to transform their business. HFCL is entering defense, Sterlite is moving into high-tech fiber and enterprise solution. Now this sounds good on paper, but execution is not easy. Defense business involves long gestation. Technology products require continuous improvement, and integration of acquisitions can be challenging. So there is always a risk that the expected growth from these segments may take longer than anticipated. And then fourth risk is HFCL has a historical governance overhang. If you go back in early 2000 during the Ketan Parekh scam, certain stocks were aggressively ramped up as part of speculative trading. These were popularly known as K10 stocks, and HFCL was one of them. The company was closely associated with that phase of extreme speculation, and its stock saw a massive rise followed by a sharp collapse. Now again, this is a very old history, but markets don't completely forget the past. And then fifth risk is valuation overhang. Today, Sterlite is commanding a PE of 300. Of course, the high PE is due to losses and very low earning growth in the past, so PE won't be so relevant. But even price to sale is trading much above the historical median. In last upcycle, the price to sale touched 3.8 and price to book also expanded significantly. That's because the stock has already jumped 250% in last few months. Mind you, company was in losses in last quarter. It has only reported massive profit in Q4, that is on 29th April. And before retail people can understand the opportunity, the stock price has already rallied 250%. And now social media is buzzing with Sterlite technology stock. On the other side, HFCL has PE of more than 50. Market cap to sale much above historical median. Price to book at slightly above historical median. So in both the cases, a lot of near-term positive news is already backed into the valuation. So now the big question is, what should investors do from here? Because if you look at both the companies, on one side, the opportunity is very clear. Demand is strong, order book are expanding, and earnings have seen a sharp improvement. But on the other side, valuations have already moved up significantly, stock prices have run up very fast, and expectations are now extremely high. So naturally, one question that comes to mind is, has the market already discounted all the positive news? And are we now entering a phase where returns may not be as attractive going forward? The honest answer is, it's very difficult to say whether this is a distribution phase or not. But one thing is quite clear. A large part of near-term optimism is already priced in. From here, execution becomes the most important factor, and of course, many people can speculate stock movement. So at current level, it is no longer a cheap fundamental bet. These are high growth, high expectation story. For now, both are momentum opportunity. In such cases, price action and news flow play a big role, and risk management becomes extremely important. So more than the entry, the exit would become extremely important, because just like in the past, if you enter near top of these stocks, they can destroy wealth. And honestly, nobody knows how long this upcycle can last and when they top out. So if you plan to enter, make sure that you exit on time. And let me repeat, this is not a buy or sell recommendation. This is just my viewpoint on both companies, where I've tried to explain their business, what is happening, and why the stock has moved so much. And again, what are the risks with the business? So that's it from my side. Now tell me in the comment, is it worth taking a bet in HFCL and Sterlite Technology as momentum companies? Or it's too risky to trade? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.